What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin and the rest of the crypto markets. We're going to do a video that I've wanted to do. I haven't done one like this in a little while. I want to do some long-term analysis and identify when I think the crypto bull market is going to end and how much from a percentage standpoint we have to go, both in terms of Bitcoin and the average altcoin in the crypto markets. If that's such a thing that we can do, if it's something that we can assume to do, we're going to try and use the charts and see if anything makes sense. So if that sounds good to you, hit the like button, subscribe. Let's get into it. Okay, let's see if this goes over well. So we're going to look at the Bitcoin chart here. BTC USD all-time history index on the monthly aspect on TradingView, right? I think first we should look at Bitcoin because it's existed longer than any other crypto. And if Bitcoin goes down, crypto goes down. If Bitcoin's in a bull cycle, crypto's in a bull cycle. So it's the Mac Daddy. Understanding Bitcoin will help us better understand the markets, I think. So the first bull market generally is unhelpful because it was it was a very short bull market for one. It was the biggest bull market we've ever seen. There was no halving. There was no Bitcoin halving or anything like that to base it off of. This was just crazy, erratic behavior. But absolutely, it was the first bull market. This was a bear market. This was a bull market. This was a bear market. That was a bull market, bear market, bull market. You can see how those things go, right? From the end of the first bull market here to the end of the next bull market, that was a 29-month period. Not the point in which it stopped, right? Just when the whole cycle ended entirely, right? 29 months. From the end of this bull cycle to the end of that bull cycle, that was 49 months, right? Getting longer. And then from this one here to the end of this cycle, that was a 40-month period right there. It was a little bit shorter. Now, it depends on how you want to do this. Do you want to say end of cycle? No doubt this was the end of the cycle, right? It's like this right here from this point, you wouldn't say the bull cycle started back here and went on for however many months that is, 35 months. No, you would say the bull market started here and this market was only for 28 months, right? Something like that. So with that in mind, would you say that the bull market went till here? This was the all-time high, or would you say that it goes here? That's 40 months. That makes more sense to me. 47 from a time perspective is closer to this. In another sense, actually, maybe 40 months was how long it took for the bull market to come to an end, but 47 months was when the bear market began, which actually does come in line with this a little bit better. 49 months is when the bear market began, the bull market came to an end. Something to take into consideration there. But 40, 47, 49, I don't know. Let's leave it at 49 for all intents and purposes. So the bull market came to an end here. I don't want to measure from here out to where we are now because I don't think that's fair, right? The bear market hadn't started yet. Every other time the bear market started right at the end of the bull market. So let's go for all intents and purposes and measure from the beginning of the bear market here, from the all-time high to the current date that we have. That's a 39-month period. So this, we are about 1 month shy. Being in March, that would give us 40 months. That's exactly as long as the last bull cycle was, okay? That'd be exactly as long as the last bull cycle. Certainly longer than this bull cycle. I think it's obvious that we are not seeing a 29-month cycle, right? But at that also, the all-time high technically came in January. So if this was the high, if we were to not go higher, technically this would be a 38-month cycle, right? If we were to not go higher than this high, this would be a 38-month cycle. So I don't think that's the all-time high by that metric alone. I think that it stands to reason that we probably see something larger than a 40-month period. Maybe 49 months. I don't know. What would 49 months look like from here? From the end of, or from the all-time high to 49 months out from there, that would be at about December of this year. That makes a little bit more sense to me, though. I don't think we see the bull cycle extend out to here, and we'll go over plenty of other metrics that suggest why beyond just this. But I'm expecting October. But we have things, that line up with next month, March, topping us off. We have things that line up with December. Something in between next month and the end of the year sounds about right to me. I don't think next month is going to be the end of the cycle. And in fact, before we get going on these time-based measurements, I just want to show you guys something real quick that's very, very easy to understand conceptually with the naked eye, right? This bull cycle, again, it did not have a halving, so it's going to be not useful in this next part. But here, on a monthly basis, we're going to put vertical lines at each month that had a halving. So November 2012 was the first halving, November 28th, 2012. The next halving was July 9th, 2016. The very following halving after that was May 11th, 2020. Okay, May 11th, 2020. And then we had our recent halving here in April of 2024, April 20th, 2024, right? Okay. So essentially every 4 years. They're not perfectly spaced apart, but you've got some pretty decent spaces there, right? If you notice, if you draw the bull cycle, what I'm going to do is I'm going to take the low from the start of the bull cycle. I'm going to measure to the high that happened before the halving, because each cycle, you'll notice, even if it's not discernible like a cycle ending high, but there is a high before each halving. So from a low to a high here, what I'm going to do is I'm going to take a trend line from the low to the high, and I'm going to draw that. That right there was our pre-halving move from a low to a high basis, okay? Then at the halving, after the halving, I'm going to take the low to the high after the halving, to the end of the cycle. So this was the bull cycle before the halving. This was the bull cycle after the halving. You see the difference, right? You see the difference, okay? Right? This right here was the bull cycle before the halving, because we had a high right there before the halving. This from a low after the halving to the high after the halving, end of the cycle. This was the bull cycle after the halving, okay? Before, after, before, after. I hope it's obvious as to what's happening here, right? The cycle tends to promote strength as it gains, as time goes on, right? As we get more mature. From a low point here in the bear cycle to the high point, this was our pre-halving high, right? A lot earlier than most of them, but nonetheless, pre-halving high. It's pretty similar in overall moves. It makes sense. Our bull cycle, our post-halving high, I'm not going to measure from this low because that's not the low. It would be from the low after the halving, so maybe from this low. This was the most lackluster post-halving rally we ever saw, and still it was bigger than our pre-halving rally. So pre-halving, post-halving, I hope it's obvious which one's bigger, okay? With this same kind of context in mind, from a low here to a high there, okay, this was our pre-halving rally, of which is bigger. It's bigger than our post-halving rally. Damn, you know, it's huge. It's not as pitched upwards, right? It took longer to achieve, but overall, from like a low to a high, it's basically, it's actually from a low to a high, to be completely fair, it's about the same as last cycles. It just took more time, and then from this one, it's a little bit under that one. So actually, from a low to a high perspective, it's actually kind of the same. Maybe it's even a little bit. It's basically the same as the last cycle. Anyways, right? That's our pre-halving rally right there. Okay, from a low to a high. If we were to have our post-halving rally, and this was it from a low to a high here, and that was it, well, that doesn't really make sense, does it? Because that right there would be the first post-halving rally that was dramatically smaller than our pre-halving rally. What if at the very least it was the same size? To say the same amount of growth, what would that do? If we saw the same pace of growth, which we've never seen before, as the cycles continue, they only grow, right, in strength. We only see bigger moves that happen faster. So seeing something exactly like this is likely not going to be the case. In fact, seeing anything under this line is statistically improbable, right? But what would this give us? What target would that give us? That would put us all the way up at about $237,000 by the end of this year, in December again, right? If we put it at that low there, the low that we had in August, our post-halving low. So what we don't know is where the price is going to be. What we don't know is when it's going to get there. But what we do know, at least what we assume to know, is that the price action is at least going to be more robust than this line is. So are we going to stop at 242,000 in September, October, November? You know, probably not, because if we stop earlier than this point here, we would have to be higher to make the post-halving rally bigger than the pre-halving rally. Oftentimes, it's significantly bigger. So just drawing for fun here, I don't know, something like this maybe, you know, that takes us up above $400,000, below $600,000, somewhere in this range. By the end of the year, that might make sense to me. And even then, in comparison to what we've seen in previous cycles, that's not that much bigger than our pre-halving rally, right? Kind of similar to this one here. Just my perspective there, just my 2 cents. I don't think that calling for a multi-hundred, a $400 or higher $1,000 Bitcoin by the end of this year is asking for too much. Not in this perspective. I want to go in another perspective before we start getting back into the time stuff, right? While we're talking about the end of cycle strength, let's analyze this some more, right? This is another fun one. It's pretty damn obvious for anybody who's doubting if the cycle has strength left, right? If we take the end of this first cycle and we go back 12 months. Out of these 12 months, there was only 1, 2, 3 red months, but even one of those red months, if you notice the percentages up here, this red month here, it says plus 3% in red because Bitcoin was so early back then, so it had gaps in the monthly open. It actually opened to the upside. There was a gap there, but it's red because it closed lower than where the month opened, but it's a green month technically because it still closed above the prior month's close. Does that make sense? So really, it looks like 3 red months, but really it's 2 red months in the last 12 months of the bull cycle. The last year of the bull cycle, you had 2 red months in the very first bull cycle. Very crazy bull cycle, phenomenal. Next bull cycle, we go back 12 months again, okay, right here. And in that 12 months, you only had 2 months that were red, only 2. Now, were you moving at a pace that was like 100% growth month after month? No, but every other month was green. Even this one here, it's not that green. It's only 0.6% to the green side, but it was green. Only 2 months out of 12 were red. We go back again, or we go to this next cycle here, and we do the same thing again, 12 months here. Now we have 1, which is less than a percent, it's 0.17% to the downside, and then 2 other months besides that. We have 3 months that are red out of the last 12, which means 9 out of 12 are green. We take last cycle into consideration, not the cycle high, but the end of the cycle, right? That's the end of the cycle there. We take the last 12 months, and again, we have 1, 2, 3 red months, of which the last one we grew. We actually grew. And all of these red months are very small, right? They're nothing big. In fact, let's look at this, right? This, from an open to closing basis, less than 10%. Here, less than 10%, though very close. And then here, less than 1%. Here, this one was 24%, so that was rather large, but you had a very explosive cycle, to be fair, too. Here, less than 10% as well. And then here, this one was less than 10%. Not even like that. That one was actually 3% green, and then this one was 11% down, so just over 10%. And those were early days. It's not common to see a red month that's more than 10% negative, right? So assuming that Bitcoin ends its cycle in December, let's just say that, because that's the latest time we've got. I mean, if it was March, let's just say it was to end its cycle next month, because that was the earliest time we've seen so far. 12 months from then, I just want to ask you guys, first off, from the original perspective that we had with the pre-halving moves and the post-halving moves, does it make sense that we've topped off now? I don't think so. But then in this perspective, does this last 12 months, does this look like end of cycle behavior with what we've seen in every single cycle so far? Absolutely not. This is not the end of the cycle. We have a lot more to go. We're just getting started. We're in the finale phase right now, and we haven't even finale'd our finale. If we have 12 months left and it's not the end of March, if it's not March that's the end of the cycle, then what about maybe December, because that was the latest one, right? And I don't think it's December. I think it'll probably be October that Bitcoin ends, but we'll just go with December. If that's the case, we've had 1 red month already. This month, in the next 6 days, if we close here or if we move up 5%, it would be another red month. That would basically not guarantee, but we would assume to believe that we only have 1 red month left until December. That would be nuts. That would be nuts, right? That'd be, I mean, if it's February now, March, would that be 10 months? Because all of March, yeah, you'd have 10 more months, because it's all January and February, yeah. So 10 months, 9 out of 10 months would be green if the cycle for Bitcoin ends in December. I don't think it ends in December. I actually think it ends in October, which would put it right, nope, not right there. That'd be, yeah, right there, September. And of which case we've already had 1 red month here. Will this be the second one? Same kind of thing. And at which case it's probably not. I don't think it will be a red month. I think that we will actually close this month green, probably above $100,000, to be honest. So we probably, between now and December, or between now and October even, we probably have 2 red months to go still. But even between now and October, which, what would that be? That's 8 months. I'm pretty sure it's 8 months, right? But yeah, if I took 2 months away from 10, yeah. Having 6 out of 8 months being green, we have half a year of green upside to go, you guys. And we have a lot of pent-up aggression that I feel like we haven't let loose this cycle yet. So it's going to be phenomenal. But my thoughts are, regardless of my perspective of how much more we have to go from a percentage basis or not, how ferocious it's going to be, at least from a time perspective, we can assume that between now and October, or between now and December, there will be at the most 2 more months that are red, and we have a lot of growth to go, right? This is what the last year of the cycle looked like last time, the time before, right? The last year is very, very bullish, and we've only had a taste thus far. Okay, let's get into other metrics here and measure for timing, just to see if we can get some stuff right. We did high to high, or end of cycle to end of cycle. Now let's do beginning of cycle to end of cycle, and very specifically the beginning of the cycle to the end of the cycle. Okay, not the bear cycle low. This just coincidentally is the bear cycle low and the beginning of the bull cycle. 24 bars. I don't think anybody would argue that there. Here, this is the bear cycle low, but that's the beginning of the bull cycle, right? No denying that. You wouldn't say the bull cycle started here. It started here, right? And even then, debatably, I mean, maybe it actually started here. That was the low. But I mean, I don't know. Let's take it here. I feel like most people do take it from there. 28 months, 24 months, 28 months. If we did it here, if the bull market actually started here, that's 26. It's a little bit closer to 24. I'm just saying. But however you want to look at it, right? Same thing here. This is the low. But did the bull market start here? And it ended here for sure. That'd be 28 months. Did it start here though, or did it more start here at 26 months? You know what I mean? And then if we did it this way, instead of at the low, but where you actually started the bull market, if we did that, you've got 24, 26, 26, or 24, 28, 28. It's all pretty close, but these ones are closer together, and this to me feels more true, more accurate. Okay, here. And I have a theory too, by the way, before we go on to this next part. I think last cycle was supposed to be our first cycle that went over 30 months. I think we're going to get that now, a cycle that goes over 30 months. I think this last part we were robbed. There were a lot of things that are going on. There's people, is it Pompliano or Anthony Scaramucci's? One of those guys, one of those big crypto guys, they say the same stuff I say. They think we were robbed last cycle. And there's a lot of things in the charts that suggest that we were robbed. We should have broke 100K last cycle, but we didn't, right? People talk about it this time. They're like, all the institutions are holding back the price. Yeah, that's what they got in at this cycle. If they're getting in this cycle, if that's when they publicly are saying they get in, they got in last cycle, you guys. They were holding back the price last cycle. So, and not financial advice, not a financial advisor. This is just like my own thoughts. I think we should have gone above 100K, and whatever was going on in the world, whatever economic kind of stuff was happening, it affected Bitcoin so much so that before we had the institutional cycle where they announced publicly that they're buying it, surely they weren't buying it beforehand. Yes, they were. Absolutely, they were. 4 out of 5 of the largest banks in the world have been involved with crypto and Bitcoin since 2017 at least. Okay, so when you're talking about them holding the price back this cycle because they're involved, you guys, they probably held it back last cycle too. But I'm getting beside myself. I think last cycle should have been over 30 months, which tells you by that at least I would expect this cycle to be over 30 months. Okay, 26, 26, 24. Let's go with that, or 24, 28, 28, whatever. Okay, the bull cycle this time started here. At this point here in December, that would be 23 months. Or no, our high came in January, right? That was our technical high. That'd be 24 months, which lines up with this cycle. So there is a case here to be made that the cycle has ended already. But again, going back to our last year and just how every bull cycle has ended, even the weakest cycle we've seen, does it make sense that it would end here? No, not really, right? We go to this month, 25 months. We haven't found our high, so that wouldn't make sense. Next month could be the 26th month, like the last cycle, like the cycle before. Could we stop here in this area, basically 4 cycles in a row? It's possible, but again, I think last cycle we were supposed to see something that lasted for about 33 to 35 months. Over 30 months at least. If we apply that logic here, and I think that we will see over 30 months, that puts us at a cycle that lasts at least until July. If we did 33 like we did last cycle to the all-time high, that would put us in October, and this is actually where I think we will top this cycle. But this is the second metric that kind of suggests in one way it could be later this year, or in the very kind of obvious way, it might be next month that we end the cycle. But I don't think it's going to be next month, right? I think people looking at this metric alone by itself will be blindsided by the fact that the market actually will continue to grow past March. Okay. Next, from here, we're going to measure out from the halving itself, from the halving date to the end of the cycle. So similar to what we did, but a little bit different. November 28th, 2012, we had 12 months left after that, right? 12 months left in the cycle. The next one was July 2016. We had 17 months left after that of the cycle, right? And then here was May 20th. We only had 11 months left of the cycle, but again, I think we were robbed. I think we were supposed to see something more like 18 months left, right? A little bit longer than the prior cycle. That's what would make sense to me. And if we were doing this instead of end of cycle, but to cycle high, right, the metric would change. But we're just doing it to end of cycle, so it looks like 11 months. But if we said to cycle high, that would be 18 months, just saying, right? But 11 months, 12 months, that's pretty close together. 17 months, 18 months, that would also be close together, whatever. From the halving date, this is whenever the cycle ended, okay? So if we go to the bull cycle here, or the halving date in April, and we associate that with the current high in January, that's only been 9 months. So likely that's not it, right? March, again, showing up as the minimum at 11 months there. It's very possible March could be the end of the cycle, but I don't think so, guys. It doesn't make sense. There's more reasons than that. We're going to go over a lot of stuff, right? Or there's more stuff at least to go over. More perspectives, okay? Just getting these ones out of the way. If we saw 17 months like the cycle beforehand, we would end this cycle in September. Or if we got the cycle that I think we were supposed to have last cycle and saw 18 months, that would put us out into October. Again, the difference here between it being in October or March is literally how you phrase the question. Is it having to end of cycle or having to all-time high, right? Having to end a cycle, well, that could suggest, maybe March here. Halving to all-time high could suggest maybe October. But I don't think the cycle ends in March. I don't think that we have a lull between March to the end of October, or till the end of the year, and then we have some kind of double top again. That to me doesn't make any sense, but anything's possible. It's very possible. You know, we basically had that same thing happen last cycle. So there's that there. March and October, March and December, that kind of time frame coming up. If we look here at the monthly time frame, we look at the monthly RSI, every single cycle, we have tipped this line, this area here specifically on the RSI, except for this cycle so far, right? We've had two peaks. One peak, two peaks, one peak, two peaks, one peak, two peaks, one peak here, two peaks there. All right, this one was a lot lower, but that, I promise you, that was the second peak, because each of these second peaks, every single one of them here, they came in. Let's see, that's the second peak. It'd be right there. That's the second peak right there. That one right there. If we take this as the second peak, and it's just not at the line. It's the first second peak that did not interact with the line, but it was the second peak after you interact with the line nonetheless, okay? And we haven't had a peak yet, so I'm not going to draw it there. But each of these second peaks that we just did on the RSI that comes in with a cycle, literally your cycle ending highs, right? That's quite literally your cycle ending highs, every single one of those lines. So not the cycle end. I shouldn't say cycle ending highs, but all-time highs, because this one actually was an all-time high. What the cycle ending high was back here. It's a little bit different, right? But all-time high nonetheless. All-time highs all come in at the second peak in this RSI after you've interacted with this trend line, right? We haven't interacted with it yet. This is on a monthly time frame on the RSI. It looks like we're on our way to go there. We haven't interacted with it yet. Generally speaking, whenever you do interact with these, you have a little bit of time in between. So from here, from this peak to the next peak, that was 4 months, and so on and so forth. From that peak to this peak, that was 7 months. From this peak to the next peak, that was 4 months. And then also the next one was, you guessed it, 7 months. 4, 7, 4, 7. Whenever we hit this, whenever we interact with this, we will likely have a signal that within the next 4 to 7 months, we will see the end of the cycle. My theory is that, let's see, if we're going to see it end in October, that would mean that the latest that we hit this line would be June. The earliest that we would hit that line, right, with that June, July, August, September, October, would be 4 months, right? Would it be March then? March would be the earliest. So March could be the month that we hit this line. If it is March, we stand a chance to go, 7 months out from there, as we have before, and then that would top us off in October. Or if we don't top in October, if it's 4 months instead of 7 months, maybe we top off again in July. And July has come up a couple times too. I don't think we top off in July. I think it is later in the year, but there's an argument to be made here, right? 4, 7, 4, 7. Maybe this one's 4. It just keeps alternating for whatever reason. But whenever we hit this peak, that'll give us a more appropriate time frame, right? It's not that the first peak with this RSI is going to give us the end of the cycle. It's the second peak that gives us the all-time high, right? But I wouldn't expect it to look like this. I think that we are going to get something that looks more like this. But again, it's something that we should be aware of. And once we see that, that'll tell us that we are essentially within like a half year, about half a year or so, a little bit over a quarter a year, a little bit over a half of a year left in the cycle, right? We're coming to the end of the cycle, in which case it's not time to sell. It's time to hold on, because things are about to get really, really fun to the upside. What else can we do here? What else can we do from a time perspective? We've measured the lengths of the cycles, right? We've measured from high to high. We've measured from halving to end of cycle. We've made sense out of end of year and beginning of year, right? March or later. Hold on. We've also made sense out of how the end of the cycle looks. Let's do price. Let's just do price. If anything else from a time perspective comes up in my head, we'll do that, right? Kind of a time perspective from this indicator on the RSI, but not so much. It'll be more time derived once we interact with that trend line. So that's something anybody can do. It doesn't matter what RSI you use. I have the 10, but you could have a 14, a 15, a 2, I don't know, whatever. But any RSI, it's probably gonna look a little bit different as far as the actual technical reading goes, but the overall look should be similar, right? Just draw the trend line from wherever your cycle highs were in the very beginning, have it connect. Once we hit that, you'll know that we are at we're at that last 4 to 7 months, maybe less, maybe more time, right? It doesn't have to be 4 to 7 just because it's been that every single time, but just something to take into consideration. Let's see. Let's go to the fibs now. Okay, let's look at the price from a high to a low. High to a low here. We went all the way up, bull cycle high to bull cycle low, all the way up to our 2272, just above it, right? Just above it. That's the key thing. And then you found support at the 1618, showing significance there. All the way up the next cycle and the next cycle on, right? We're going to take this bull cycle high to the bull cycle, the bear cycle low right there. And you see again, you went all the way up right to your 2272, but just above it yet again, right? That's where that under 20K high came in right there, okay? High to low, all the way up just above your 2272, 2 cycles in a row, okay? If we go to the next cycle's high to low, and you'll actually even see, I meant to say this, oh, but we would have to redraw it. Damn it, that's okay. You did find support here at the 1618 as well, right? Not at the low of the bear cycle, but at the COVID crash, you did find support at the 1618, okay? This next cycle, you did not hit the 2272. You only went to the 1618. But again, remember, I think last cycle we got robbed. I think we were supposed to grow to the 2272. But we didn't. Maybe we were supposed to grow at least to the 1886, but we didn't. So we stopped at the golden ratio, had a double top there, okay? Showing significance on the golden ratio again, though. From a high to a low, that would at least give us some kind of premise to believe or suspect that at least 173, 174K would be a cycle-ending possible target for Bitcoin. I don't know about you guys, though. I don't expect that to happen because, again, going with what we've said before, with the analysis we did before of the pre-halving versus post-halving moves, to get to this price on the current path that we're on, that's going to make this post-halving move rather weak. And if that's all we get, that's fine. If we have a weak cycle, that's fine. You know, it's just not what I would expect. You know, we can sell if things look like we're weak and we're going to sell off, we get some kind of double top again, we can do that. If we don't get a double top and things just plummet, you know, and catch everybody off guard, that's a different story. But surely we'd be able to sell at higher prices than we're at now. You might not be able to time the thing right, but you can at least withstand the bear market if that were to happen. I think if we were to blow up, come up to the 1618 and then just dump from there, that would catch a lot of people off guard. And I personally don't expect that to happen. Though, to be completely fair, a lot of the things that catch people off guard are what happens the most. So it's something to note, at least as a possibility. Why? Because we've seen it before, at least once, right? We had a double top there, and we found support there throughout the cycles. So we do at least show some significance there. I'm not saying that I expect us to stop here, but wouldn't it be great if we stopped here momentarily, had a look of a double top up here, and then broke out, something like that to end the cycle? I don't know. I do think we're going to go to the 2272 here at about $462,000. That's my expectation personally. I also think that this cycle is going to be stronger than the last cycle. We don't have, I guess we do have quantitative tightening, but there's a lot more of a dovish tone with the Federal Reserve and the United States, the dollar, the economy. I don't know, with interest rates and stuff like that, with the markets. You know, interest rates are coming down, but not too fast. That's a good thing, right? It's okay if they come down. It's just not okay if they plummet down. That tends to crash the economy for whatever reason. And we don't have, you know, Russia and Ukraine are still in conflict, are still in war. But back here at the end of this bull cycle, where we had that same thing going on, it was fresh, it was new. People were worried about nuclear war, World War III, all these kinds of things, right? We had COVID. We had, you know, there's basically a recession beginning here. We had the DXY, the US dollar index, was in the middle of an expansion phase. If you don't know what I mean the US dollar index, the DXY, it was growing during the same phase in the markets where we were supposed to have our bull cycle finale, and it didn't happen. There's just all these things, you guys, that prevented high inflation, right? All these things last cycle that are just absent this cycle. And there is still conflicts in the world. There are. But it doesn't seem as fragile these days. It doesn't seem as fragile these days. So I think that not only with that in mind, will we see a very bullish cycle that takes us to our 2272? I think we'll see a cycle that was stronger than the last cycle, right? Here's a very bold call, and I don't know how many people are making this call, but I feel like it's almost blasphemous to the kind of idea of what's accepted in a lot of OG kind of crypto people's minds, is that each cycle we see weaker returns, we get diminishing returns, right? That's kind of the accepted narrative here. So people are going to expect that this cycle we see diminishing returns. I don't think we will. I think this will be the first, maybe the only bull cycle where we see actually greater returns, okay? From here, if it, you know, I don't even want to go through all the cycles. Let's just go to last cycle. We can just measure. Just trust me when I tell you, every cycle we've had diminishing returns, right? Last cycle was the smallest cycle from a low to a high. Low to a high we grew 200 or 2,100%. So if I suspect that we're going to at least see a cycle that's bigger than this, that would mean that we see more than $344,000. We would see a price that's more than this. And that makes sense to me because from a high to a low, I don't think we're going to stop at the 1618. I think we're going to stop at the 2272. If we stopped here at the 1886, okay, we'll get diminishing returns. I'm wrong, but that's okay. We're at least above $260,000, $300,000, somewhere in that kind of area. But if we do see a cycle that's similar, if not stronger than the next cycle, the only logical fib area to stop to would be the 2272, which is just coincidentally an area that we've been very friendly with for a couple cycles at least, right? From an overall all-time high to all-time low bear cycle, bull cycle extension. And oftentimes you do when you interact with the 2272, you go just above it. What's just above 462K? That magical number of 500,000. That's that psychological resistance at $500,000. And not only that, not only is that $500,000 in price, $500,000, but if we look at Bitcoin here, you're at about a $1.9 trillion market cap here. When Bitcoin's at 100,000, you are at about a $2 trillion market cap. So 100,000 psychological resistance, right? 2 trillion, not so much, whatever. But if we take 100,000 and we make it a 500,000 price, right? We 5x it, okay? 5xing it puts it into 500,000, right? If we took a $2 trillion market cap and we 5x it, that's a $10 trillion market cap. So not only do you have resistance psychologically at this $500,000 level, but also psychologically from another standpoint at this $10 trillion level. That's a very psychological hurdle to get over, very big psychological hurdle to get over, okay? All I'm trying to say by this, you guys, is that I think Bitcoin is going to grow between now, at least between now and March, right? It's going to at least see 170K. But I mean, I wouldn't be surprised if we were at 170K by the end of March, but that doesn't mean we're at the end of the cycle. If it is, we'll go from there. You know, I'll have to make an apology video at the end of April or something like that. But you know, that would definitely be, this would be the most lackluster bull cycle we've ever seen. And I don't think with the current administration, with the way that things are going in the world, I don't see that happening. You know, and who cares what I say? But there's other indicators, right, on the RSI. There's other indicators just by like using our eyes, seeing how we normally perform at the end of each cycle. You know, with the way that we started off this cycle versus last cycle, this is much more constructive, moving up, stair-stepping our way, right? We took more time to see the overall same growth, and we did it very constructively. I think that we have more room to run, right? It's whenever you move up sporadically, erratically, and you don't consolidate. That's whenever you have to consolidate for a longer amount of time, right? That's where you see these major corrections. But when you stair step like this, it's very productive. It's very healthy structure, okay? And moving up to new all-time highs, consolidating like this for months at your all-time high area from your previous cycle, while we had the Bitcoin ETFs and everything coming in, right? This is the year that Donald Trump got elected. We have the first crypto-friendly administration in office. Like, I don't see this thing doing anything lesser than last cycle, right? And certainly this is not our end of cycle finale because it doesn't look anything like any of the end of cycle finales we've had, right? So I suspect by the end of the cycle, which could likely be, I mean, there's a chance it could be next month, but I think it'll be probably the end of this year, September, October, November, December, at the earliest July. But I'm thinking October specifically is whenever the cycle will end. $500,000 is the price expectation, somewhere around there, right? Give or take a couple, you know, tens of thousands of dollars here or there. Watching the RSI on the monthly time frame will be a big help on that aspect. If we look at this too, we look at the pi cycle indicator, right, on a daily time frame. The pi cycle indicator is one that has been pretty flawless most of the time, right? Here last cycle, the pi cycle top was at the first peak, not the second peak, but that was the end of the bull cycle. Though it didn't call the all-time high, it did call the end of the bull cycle, to be completely fair. The pi cycle, by the way, whenever it tops, it's when the red line interacts with the green line. I'm fairly positive, right? Yeah, right there. Once the red line got above the green line, that's where the pi cycle top is. So just in that kind of same perspective, the red line here, it takes a lot for the red line to move up, right? And the green line's moving up too, so we have to move at a faster pace in order for the red line to interact with the green line, right? Faster than what we've moved so far. The way that we're pointed right now, how this looks to me at least, is that Bitcoin would likely go over $200,000. We'd have to go over $200,000 in a very short amount of time just to get this red line to come up to this green line, right? We're nowhere near the pi cycle indicator showing us the all-time high. And let me just show you again what this is, right? The red line here You got to scope it in. I know it looks silly, but whenever you scope it in here, that red line, as soon as it crosses the green line, which was right here, quite literally, it was like right, it was either right there or right there. It was one of these days. I'm going to say right there, okay? And then we zoom out, right? Pi cycle top, that's what it is. It's right whenever it crosses the green line, okay? Very easy to kind of understand. And if you go back, same thing happened here. Pi cycle top right at that high. That was the 2017 high. Okay, end of cycle top right there. Pi cycle top right here. Pi cycle top right here. That wasn't even the end of the cycle, but that called a mid-cycle peak. And then the first bull cycle again. It was so weird. We didn't. The red line was above the green line the whole time. There was no indicator because the first bull cycle was just so crazy. So just putting this in perspective too, a indicator that's widely respected in the space. It's nowhere near a topping signal at all. In fact, in prior bull cycles, we found support at these lines here. We found support at these lines here, right? The red and the orange lines. We're finding support at the red and the orange lines now. So I don't think the bull cycle's over. I don't think we're going lower, you guys. It would just be crazy if we did. Likely we are going higher. Likely we're going to see a multi-$100,000 price by the end of the cycle. Let's look at others, and then we'll end this real quick, okay? So I think Bitcoin, just to put that in perspective, I think Bitcoin will achieve a $10 trillion market cap by the end of the cycle, okay? Total. We go to crypto total market cap, do a high to a low here. And by the way, actually last cycle, we'll do high to low here. That went all the way up to the 1618. You can see it did basically the same thing Bitcoin did, right? Topped off at the 1618. So I'm going to assume from a high to a low, if Bitcoin sees the 2272 this cycle and it goes just above, that the total market cap might also go to the 2272 yet just above. What's just above 18.3? That makes sense. $20 trillion. $20 trillion, right? If Bitcoin's at $20 trillion, or if Bitcoin's at 10 trillion and the total market cap's at 20 trillion, that leaves a $10 trillion market cap left for the altcoin markets, right? $10 trillion. If we go up higher, if we see $30 trillion in the total market cap, that would leave a $20 trillion market cap for the altcoin markets. So let's go to others with that in mind, right? 10 to 20 trillion, we can make sense out of that, right? We're basically at 271 billion right now. Oh, but this is others. This isn't the total. It's not total 2. We should do total. Maybe we should do total 2, excluding BTC. Yeah. Okay. Let's just see if we can make sense out of that. So something that would point to about 10 trillion to 20 trillion dollars. High to low here. Again, last cycle you saw your high to low, and it went all the way up to your golden ratio, the 1618, just like Bitcoin did. Oh, actually, you went just under. You went just under. Okay, so maybe with this perspective, if we're expecting Bitcoin to go to its 2272, maybe this thing goes less than its 2272. I don't know. Something around there, though, that's $10 trillion, and that was the number that we were looking for. And the 2272 is something that we're expecting to respect across other time frames. So $10 trillion would make sense to me. How much would the others market cap make it, right? Because this is everything else but Bitcoin. This is like the altcoin market cap, but you have Ethereum in here, you have XRP, you've got other cryptos, Solana, right? Let's do others and just assume what's others going to get. What's the total slice of pie going to be for others here at that same 2272? High to low here. 2272 is at 6 trillion. Okay, so I could see that. Right? If between Ethereum and the other top 10 cryptos, there's $4 trillion, and then the rest of the altcoin market, we have $6 trillion to keep up the total market cap at 20 trillion. That makes sense to me. If we're going to see something around $6 trillion, you guys, from the current price of the others market cap, what this means is the average altcoin is going to see a price growth something on the lines of about a 22x. Because again, we likely go just above the 2272. So something on the lines of a 22x. Maybe even a 23x, right? And potentially we go higher. We could see something higher, but I don't think the average coin in the space is going to do a 42x or more by the end of the cycle. Maybe, but likely something around a 20 to a 23x, something like that is what I would expect to happen. So if you have a coin that at least does that, good job. You're performing on average of the rest of the markets. If you have a coin that does less than that, you have an underperformer. Anything more than that, and of course you are outperforming the markets, right? So keep that in mind. I think this is actually a very important number right here. If you stayed till the end, you got the helpful number. When you're doing analysis on coins, whenever you're researching coins and trying to find something that's of interest, if you notice that your minimum targets, or there are targets at least on the lower end of whatever your projected range is, and they are around a 22x or more, then that solidifies that your minimum targets are the average expectations of the average coin, you have a winner there, right? Does that make sense? If you have something that likely sees over a 22x, you have something that's going to outperform. So this is a good, I think, bar. Like if there was a standard, a bar, we don't know what it is. We don't know how much the average crypto is going to grow, but I think a 22x, that's a good bar. That's a good bar to have, right? If you, between now and the end of this year, but between now and the end of this cycle, if you can't find a coin that at least does a 22 to a 23x, you're looking in the wrong places. You're looking in the wrong places. That's all my thoughts are, right? Not financial advice, not a financial advisor. Do whatever you want, right? Nothing wrong with holding on to Bitcoin, Cardano, Solana, Ethereum, XRP, coins that probably won't do that same amount of growth in this amount of time. Although XRP could do, I don't know what XRP could do some crazy stuff, you guys. I don't know. I'm kind of thinking XRP could do some crazy stuff, but the average coin is likely not going to do more than this, is all I'm trying to say. I've got nothing else for you guys. I think this video has gone on way longer than I meant for it to. It was very, very Bitcoin dominated. I didn't say everything that I wanted to say, but it's gone on longer than I meant for it to anyways. So ta-ta for now. Hit that like button. Subscribe if you want to see more content like this. I hope you guys have a good understanding of why I think Bitcoin, and not just Bitcoin, but the cryptocurrency markets themselves, are not done with this bull cycle. We have a lot of growing to do. And then again, that little takeaway at the end there, set your bar at least at 22 to 23x. If you're looking at a coin and your maximum potential is less than that, look elsewhere, because probably it's not hard to find something that can do better than that, right? That's my opinion. Anyways, ta-ta for now. Take it easy. Bye.